Hello everyone, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3 things to pay attention to for the upcoming trading week. Now we'll start things off with earnings. We know it's getting near the tail end of earnings season, and there aren't really the major companies reporting that could be market movers. However, there are 88 companies reporting this week, and some of them may be in your portfolio and may be noteworthy. We start things off on Wednesday. That's right, nothing on Monday or Tuesday that's really big and in the U.S. Most of it's international. But on Wednesday, we get Micron Technology, Constellation Brands, General Mills, Bed Bath & Beyond, and Shaw Communications. And Thursday brings you Walgreens Boots Alliance and Merck & Company. Now, we'll move things up a little bit faster here and get to some fun stuff. We're going to talk about unemployment rate. That's right, jobs. Over the past couple of weeks, maybe even a couple of months, we've heard the Fed and our central bankers talking about how robust our economy is doing and how all this stimulus has been boosting the jobs and everything's looking great. Well, is it? Let's take a look at some historical charts here to gain a sense of perspective. Looking at this long-term chart of the unemployment rate in the United States, you can see there's been some big waves. Now, the middle of the chart is what I really want you to focus on. That's right around 2009 going into 2010. That's the big surge up where we saw the unemployment rate hit about 10%. And the Fed said, we're going to keep rates at about 0 until we get to full employment. Oh, it sounds so nice to say full employment. And that number that they said was 5.5%. As you can see on this chart, we've drifted much, much lower, and a little red line here, right around 3%. So we were far below their deemed full employment, and they still kept rates at 0. Now, of course, the pandemic hit, and we saw that big spike on the hard red edge there, jumping up to about 15% unemployment. The good news is we've been drifting back down aggressively, getting back down to normal. The most recent reading was 5.8%, which, going back to the historical talk track, is above that 5.5%, which was full employment. So we're still a little high on unemployment, but that number is drifting down. Now, that number is expected to come out about 5.7% on Friday at 8:30 Eastern Standard Time. Any deviation or significant deviation from that expectation could create a lot of waves in the market, so be careful. The good news is it's before the market opens, so Friday should be a wild ride. Last and definitely not least, we're talking about crude oil. More specifically, we're talking about the OPEC meeting, which is going to be happening on Thursday. This is an all-day meeting. And you're thinking, wait a minute, I've already heard this on Monday Morning Must Knows before. That's right, because this is a monthly meeting. And last month, we showed you a chart of crude oil. And we thought this was a very interesting one as a potential trade setup. Let's take a peek at what we showed you last month. Here's that chart of crude oil. And you can see we have an ascending triangle mapped out by those 2 lines there. Lows are getting higher, high stays about the same. Historically, that is a pattern that shows pressure building, and normally, statistically, there's a breakout to the upside. Now, it doesn't always happen, but we pointed this out and said maybe there's an opportunity here. On the hard red edge of that chart, that's right when this OPEC meeting was happening at the end of May. Let's see what happened. As you can see, prices broke out to the upside and have been trending very strong. That is an expected move with a pattern like this. Now, where's it going to go from here? That we don't know. What we do know is that prices are getting more expensive for crude oil. So if you own futures, if you own oil companies, this is great for you. Profits are good, you're making money. But if you're a consumer of oil products, meaning you have a car, motorcycle, airplane, fuel is getting much, much more expensive. Heck, I live in California. You can't find gas for under $4 a gallon. I know you Texans and people out in Florida are laughing at us, saying, we got it for $1.50. Well, it's still going up on your end too. Bottom line is oil is under a lot of pressure right now. It's moving to the upside. The trend looks very strong. But as prices get higher and higher, you're going to start to hear our politicians talking about how this cannot continue. We have to get gas prices down. This is hurting America. And we're getting into summertime, which means we're getting in our cars and we're going places because you can't tell me to stay shelter in place anymore because of COVID. Oil is going to be under a lot of pressure at this OPEC meeting, so maybe the talk track might include about increasing supply production by these OPEC communities to help bring oil prices down. Regardless of what happens at that meeting, oil will be a volatile play this week. That, my friends, is your Monday Morning Must Knows. We'll see you next week.